You may own a home where you've seen an increase in your equity, but you have a first mortgage at a very low rate. In fact, it may be at a rate that's at an all-time low. So how do you access that cash equity that you want to get without touching that very low rate first mortgage? Well, that'll be the subject of today's video. Welcome back. I'm Alvarez with MortgageWorks, where we have the answers and they're on the house. We're talking about how to access your cash equity when you have a very low first rate mortgage that you don't want to touch. Well, the good news is you have some options. The most common option that we get asked about a lot is an equity line of credit, also known as a HELOC. And when I get that inquiry, of course, I point out that yes, an equity mortgage loan is a good option. Now, what's interesting is I get a lot of homeowners who will say, well, no, I don't want a second mortgage. I want to get an equity line of credit. Well, what they don't understand is an equity line of credit, a HELOC, is a second mortgage. Just like your first mortgage is recorded as a junior lien on your property. So a HELOC is one option, but you do have an alternative option if your situation does not conform to the requirements of getting an equity line of credit. Let me explain. With an equity line of credit, you're going to be able to get an amount that's going to be based on a combined loan-to-value limit, that is a combination of your first mortgage and the equity line amount as compared to your home value. And then the other factor in determining the equity line of credit option is what your credit score is. The basic idea is the higher your home value and the higher your credit score, you will be allowed to have a higher combined loan to value when you're adding your first mortgage balance to the desired equity line of credit amount that you want. Now, as you get into lower credit scores, the combined loan to value limit is going to go down, and if your credit score is low enough, typically under 680, a home equity line of credit with most lenders will not be an option at all. But the good news is you have a second choice, and that is a fixed rate second mortgage. Now with these loans, you're going to get a fixed rate loan with a term from 10 to 30 years, and we can provide those with a credit score as low as 620 and with a combined loan to value up to 70%. So the point is you have a couple of different ways to access that cash equity. So before we wrap up today, I do want to talk about the pros and cons of equity lines of credit and fixed rate mortgages. With an equity line of credit, also known as a HELOC, you want to think of it as a credit card secured by your house. It has the flexibility of when you get the loan, you can draw against the loan for as much as you need. You don't have to draw all of it, but you'll have that leftover amount to use later. It is a variable rate loan. It's tied to the prime rate in most cases, and the prime rate will change whenever the Fed changes the Fed funds rate. So you do have to consider the fact that an equity line of credit is a variable rate loan where the rate could be going up. But the benefit of it is, as you pay the loan down, you then can re-access the unused credit in the future for any purpose whatsoever. Plus the fact that as you pay down the balance, your required monthly payment the next month will go down because it's calculated off the remaining balance. So all these features are very attractive to a homeowner because of the flexibility involved. Now, a fixed rate second, also known as a HE loan, with these, it's a traditional fixed rate loan. When you get the loan, you get it for a specific loan amount and a fixed interest rate. But when you get the loan, you get the money all at once. You do not get to, as you pay it down, you do not get to go back and access any unused credit. Once you get the loan, you get all the proceeds at once, and it's a fixed rate loan, you're done. Now your rate is fixed, so compared to a HELOC, you don't have to worry about your rate going up in the future. What I have found with talking to homeowners in the past is both of these options have pros and cons, but it can be a little bit confusing in distinguishing between the two. That's where I come in. My information's on the screen. I encourage you to get in contact with me so we can have a discussion about both equity lines of credit and fixed rate loans so I can help you determine what's going to be the best option for you and your situation.